Hello, my name is Brooke Sutherland, and today for Bloomberg Opinion Conversations, I am joined by Alexis Leondis, and we're going to be talking a little bit about those options that you may have noticed on e-commerce sites where you can buy something but pay for it later or over time in a different installment. I know I have definitely noticed these buttons, Alexis, when I've been doing all of my online shopping during the pandemic, and I'm not going to lie, my first instinct was, is this some kind of a scam? And so can you explain a little bit about what these payment options actually are and what they're meant to do?
Sure. So I'm sure, just as you said, with more online shopping, especially during the pandemic while everyone was home, you may have started noticing when you were at checkout that you would be given an option. You could either pay for the item in full with your credit card or debit card, like most people typically do, or you could use one of these options that essentially it's kind of like a modern day layaway plan, if you will, except you're able to take possession of the item right away. So you're buying it now, but you're paying for it later. And there are all different apps out there. There are all different ways to do it. Some of them, the way that you do it is you ultimately make a small down payment and then you pay bi-weekly payments, over 6 weeks or so. Others are more geared towards like bigger ticket items. And with those, you do what's called point of sale financing, and you basically get a low interest rate. And then it's like a much longer period of time, could be up to 2 years to pay back or pay for the item in full.
And do you necessarily know what you're getting into, though, as a consumer? Because I feel like I usually see these on retailer websites. I'm not necessarily seeking out, a payment plan.
Right. That's exactly what's kind of interesting and why merchants like this so much is that if you're using, Affirm or Afterpay, most consumers, they're not going to the site itself, using the app first. They're actually going to the retailer or the merchant or, whatever they're choosing to buy their Peloton bike. And then the option at checkout is popping up. So that's why one of the biggest issues with this is that there's so many different apps and they all have different terms and different rules and different penalties, that it's not that you're seeking out the app first. So exactly, okay, I'm using Affirm. This is what Affirm's rules are. You're trying to buy something and that merchant may have partnered with one app, which means there's one set of rules, but then you choose to buy something else. And that retailer may have partnered with a different app, and it's a whole different ballgame.
How much of a variation are we talking about in terms of rules for these different payment options? I mean, is it just sort of slight variations, or is it the kind of thing where you could really get tripped up if you're not paying attention to the fine print?
No, it's more the latter, just because, by last count, I think there are almost 24 different buy now, pay later apps.
Wow.
And again, and they're really different. Some are really straightforward and it's just, 4 payments, you divvy up the actual balance and you pay it off within 6 weeks and you're done. But then there are others that are way more complicated. And most of them won't charge interest, but some of them will. And some of them won't charge late fees, but some of them will. Some of them won't report to the credit bureaus if you're late. Some of them will. So there are all these different, implications for your credit score that you may not be aware of. And especially another thing while I was reporting this out is that credit cards, for all their shortcomings, they have become more regulated in years, past. And with Dodd-Frank, now they have to be a little bit clearer about the interest that you owe and what the different terms are. This is kind of a very new burgeoning industry. There aren't as many regulations. So what these apps can do and the way that, these payments can happen, it's kind of all over the place.
So what sort of are the regulations right now? Is there anything? I mean, or if I'm a consumer, it can be whatever the payment app decides it needs to be.
Not quite to that extent. Technically, the Consumer Financial Protection Bureau is in charge of kind of looking, keeping an eye on these. But if you go to the CFPB's website or you go to the Better Business Bureau's website, there are complaints. Obviously, with any product, there are always going to be complaints. But the main takeaway, what I was trying to convey to readers with my column is that kind of like when people talk about Robinhood and how that's democratizing, investments, and, that's not necessarily the case. I kind of feel that way with buy now, pay later. Its supporters are trying to say that this is a way for everyone to get credit and it's much more transparent and it's the way younger consumers want to spend. But I think ultimately, obviously, people are making a lot of money. Square is looking to buy Afterpay for $29 billion. So there are reasons and motivations here why for merchants and others, they think that there's money to be made.
And you bring up that deal, which happened, at the beginning of this week, and it's a big dollar value, I think almost $30 billion. And I'd never even heard of Afterpay. So is that a very predominant option here in the US, or is that elsewhere in the world?
Sure. Afterpay is really popular in Australia. It's an Australian company, but it is one of the major players here, like Affirm, Afterpay, Klarna. Those are three of the popular ones, or the most popular at this point. But it's hard, again, to get really good data because it's such a new industry. And again, because there isn't that much regulation, even, trying to figure out the demographics of who's using it and, what's their average income, stuff like that can sometimes be really hard to come by.
So I guess to go back to some of the differences in these policies that you were talking about around late payments or interest fees, how do you make sure that you're not, missing a payment in one of these payment plans that might trigger some of those issues? Do you have any recommendations for consumers on how to stay on top of that?
Sure. Well, some of the apps are more consumer friendly, if you will, and they will send you a reminder. So they'll text you a reminder before a payment is due. And especially for people who have linked the app to a debit card, that again could be dangerous, because if you don't remember to transfer money over, you can get hit with overdraft fees, which, can certainly add up.
Kind of double jeopardy in a way.
Exactly.
Right.
So I would say the first line of defense, if you will, is to try to make sure you're using apps that are maybe a little more consumer friendly or user friendly, and they will send reminders. I mean, obviously, if you're a very disciplined, organized person and you're able to keep on top of all these different things that you may be buying and, what the different payment plans are, great. But I think the average consumer, can get overwhelmed pretty quickly.
I mean, are there good use cases for these payment plans? You sort of touched on this a little bit, that they do have, the sort of core of supporters and looking at this as the way of future for purchasing activity. Are there, good applications, or is it really more of sort of this hidden risk?
No, I think it's a little bit of both, but I think there are some positives. I think if there's an item that's considered like an essential home item or refrigerator, something you really need, and you're unable to make the full, expensive upfront payment, but that you're able to make the scheduled payments, you just don't have all the money right now, but you have a steady job, or you do have income coming in, so you will be able to pay it off at these regular intervals, then by all means, why not? If you're doing one or two of these essential home items, that's where it seems like it would make sense and it would be helpful. But by and large, again, from the data that we see, it doesn't seem like that's what people are really using these for. A lot of times they're using it, for clothing, like fast fashion purchases. And there's other data out there, studies that show when you can buy now and pay later, you ultimately end up spending more. And oftentimes you spend it on kind of quote unquote frivolous stuff that you don't necessarily need.
Should we be concerned that these are growing in popularity right at the time that sort of Americans have this extra cash in their wallets? We've had all this stimulus money. I mean, it does seem like people have more capacity to spend right now, but is that always going to be the case?
Right. I mean, I think it depends what you're spending it on, obviously, and, not to be so paternalistic to tell people what they should and shouldn't be buying. I guess one of the benefits of these apps, I should say, is that some of them, they will cut you off. If you miss a payment, they won't let you continue to use the app, unlike a credit card, which often you can like rack up debt. And before you know it, you're, tens of thousands of dollars or more in debt. That is a benefit of these. Again, not all of them, but some of the apps will essentially say, like, once you miss a payment, you're done and you can't continue to use this. So that's a positive, if you will.
But it makes more sense, like you were saying, to do sort of the big ticket items, sort of more of a one-off thing than as a regular payment option for everyday items.
I think so. I think because we had talked about this earlier, if, things that you pay, that you subscribe to, like on Amazon regularly, dish soap or diapers if you have kids, whatever it may be, that I would kind of stay away from, because again, those are frequent payments. And then I just think it becomes more complicated to try to keep track of everything. But again, if it's a big ticket item, or even if it's something, an indulgence, but it's something that you feel like you've saved up for and you do have, money for, or you are going to set aside money to make those regularly scheduled payments, then, go for it. But I think where it comes in to be an issue is when it's being used very frequently and it's being used kind of for spur of the moment things that, ultimately you wouldn't be buying for if you didn't have the money all up front in the first place.
And when you don't necessarily understand the risks of what exactly you're signing up for in terms of
right, or what it could mean for your credit profile, for good or for bad. I also try to make this point that with credit cards, yes, there are obviously things and ways that people can get into big trouble financially with credit cards, but at least with credit cards, when you're spending, you acquire, rewards, you acquire perks, you acquire cash back. There are some positives. And most importantly, for those who are looking to buy a house down the road or to borrow for a mortgage, you build your credit history and you become someone who the banks will potentially lend to if you're responsible with credit. The apps, don't necessarily do that. So it could be dangerous if younger people are exclusively using these, staying away from credit cards, and then wind up with, little to nothing for a credit profile.
Is there an incentive on the part of merchants to steer people more toward these, pay by installment plans rather than credit cards? I mean, I know that we've seen so many stories over the years about credit card fees and merchants pushing back on that. Does that play into why these are becoming more popular right now?
Yeah, I think merchants feel that, especially for millennials and younger consumers, because they're kind of reticent when it comes to using credit cards, and they've heard all of these horror stories. They grew up during, or were young enough to remember the Great Recession. Because they're not going to necessarily use credit cards, the merchants love this because they think this is a way, even if they don't have the income to pay for something up front, they're still going to spend, $100 or $200 on something, even if they don't have the disposable income. So merchants really love this. And I think, again, they like it too, because they're coming to the retailer website first, and then they're seeing this option to pay in installments. So again, for merchants, it's kind of win-win, even though they're the ones who ultimately pay the fees to these apps. It's worth it for them. But on the consumer side, someone that I spoke to for the piece said, merchants, if they know that people are willing to spend more, they may not offer sales or discounts as frequently, because they know if people can just delay payments, then they'll just, they don't mind, and they don't necessarily need the discount.
Which I thought was one of the most interesting points of a very interesting and general piece that you wrote. But I wonder if there might be other sort of changes to retailer behaviors. I mean, apart from just not offering discounts, we are also in a more inflationary environment where people are pushing through price increases. So does this potentially delay customers starting to really feel the hit of price increases, or make them think a little bit differently about higher price points?
No, that's a great point. I think so. I mean, I think if you have an item, but it's going to be divvied up in 6 payments or 8 payments or 10 payments, whatever it is, obviously the smaller dollar amount, even if it's affected by inflation or whatever else, you're just not going to feel it as much. So it could be, delayed in some ways because of that.
And in terms of, I mean, we've talked about how there's so many different providers and you don't necessarily know what you're signing up for. How do you actually get that information as a consumer? If I'm just on a e-commerce website and I really want to buy this bag and I see this great option to sort of divvy up my payments, how do I make sure I really fully understand what I'm getting into?
Sure. I would go to the app's website directly. So go to a firm's website, go to Afterpay's website, go to Klarna's, whatever the app may be. But again, because they're not quite as regulated as, a financial product, if you will, some of the way that they're again, some apps I don't want to single out because they're all over the board, but the way in which some of these apps are disclosing the information, they're not as transparent as they should be, where you really have to dig around to figure out, wait, like, will I get a late fee? Will I not get a late fee? Do you send this to a debt collector? How exactly does this work? But yeah, first and foremost, go to the app's website to try to figure out how it works exactly. Some of them, try to be very transparent or say they're very transparent and do lay things out, but others are less so. So that's something you certainly want to know so you can keep track of, what you're using and how it could hurt you if you don't make those payments on time.
What about returns? I mean, it is a rare occasion these days that I order like a bunch of just different stuff from an e-commerce site and don't send something back. So
of course.
Does that work with these payment plans, or do you need to be concerned about that? Is there variations in policies on returns as well?
No, yeah, that's one of the biggest issues with these. In addition to, when we're talking about like keeping the terms straight or just spending more, it's a very basic thing that, especially now, if people aren't shopping in stores as much and, you order an item in different sizes or, just you have a bunch of stuff that you want to return, just think it is difficult because if you're still in the middle of a payment plan, but now you want to return something, not only is this, arrangement just between you and the retailer, but it also involves this third party who now, as this middle person, has to kind of figure out, well, how much have you paid already? What was the full price of the item? And a lot of times stores may want to issue just a store credit, but you're like, no, I want my cash back. So if you go on the CFPB or the Better Business Bureau's website and you just kind of, if you're bored and you want to look through and read through some of these stories, a lot of them have to do with issues with returns or refunds and people just, being frustrated because they didn't get, what they thought they were entitled to. And another point to raise is that a lot of these apps, they have fintech backgrounds. They don't necessarily have, the manpower to have call centers or, actual people to help when there are issues. So hopefully that's something that will come in the next iteration as these kind of grow and mature. But for people using them right now, they might, again, really be frustrated if they're trying to make a return or get a refund.
Does that also apply to travel bookings? I mean, we are still living in a pandemic, and
Yep.
I cover the airline sector, and they are still, dealing with tons of last minute cancellations and changing plans and stuff like that. So, I mean, without a customer service center, do you have a direct path to getting a refund if you use one of these payment plans for a travel booking?
No, it's really difficult. And again, that's another one of the more common complaints too, is having to do with travel. And again, it makes sense. I mean, so many people, they want to take a trip, but it's so expensive. So you don't have the thousands of dollars or the hundreds of dollars up front to be able to make that payment. So in theory, it sounds good, buy now, pay later. But if there are issues with canceling the trip or because of the Delta variant or, a whole host of other issues, especially in this current environment, it seems like it's really difficult for people to get the money that they've laid out to get it back.
And it's a real contrast right now because most airlines are being a lot more flexible about giving you refunds with travel cancellations. So you may be better off with that in the short term if you can, sort of afford that lump sum. We do have a question coming in. How do these payment apps make money?
From the merchants.
Okay.
Unlike with credit cards generally either make their money through transaction fees or they make their money from interest for people who don't pay their balances on time. The way that these apps make their money is from the merchants. But again, the merchants are it seems like more than happy or totally willing to pay these fees because they know that consumers are going to come to their websites and spend more than they ordinarily would.
Okay. No, that makes a lot of sense. Well, my final question is, we talked a little bit about Afterpay and how that's more popular in other areas of the world. And you mentioned, that the tide is sort of shifting elsewhere in terms of regulation. Do you think we might be looking at that in the US where we start to see, institutions in the US really crack down on these pay later apps and put some more rules around them?
I think so. I mean, I certainly hope so. I think we would be wise to look at what's happened in the UK and Australia and other countries in Europe where buy now, pay later is much more common. It's been around for longer, but they're really starting to ramp up pressure on the apps and they're really trying to have better regulation around them. So I think, US lawmakers and others would be wise to kind of see what's happened overseas and, really think about the best way to protect consumers from now before it really does get even more popular with, acquisitions like Square and Afterpay.
No, absolutely. Well, this has been incredibly insightful. I've learned a lot more about this, buy now, pay later button that I never really understood before. So thank you so much, Alexis, for taking the time and talking with me about this today.
Of course. Thank you, Brooke.